Jersey Oil and Gas is a London AIM-listed oil and gas stock with assets off the Scottish coast. It's recently brought in Statoil into its exploration venture. Andrew Benitz is Jersey Oil and Gas Chief Executive. He joins us now with some more analysis. Andrew, welcome. First of all,
Jeremy.
Explain. It's good to see you as well, because I know you've been in the business a long while. I mean, we've spoken before in other lives, if you like. But this is a relatively new venture, Jersey Oil and Gas, and I believe you bought an existing oil company, you've turned it around, and you've got these assets now. Explain a bit more about what it is you're doing.
Sure. We started Jersey Oil and Gas in Jersey 2 years ago. We started with a blank canvas. So we had a team, and one that I've worked with in the past. We were very keen to come in at what we thought was a tipping point in the cycle and explore opportunistically for opportunities. And as we went through our broad remit, we began to focus on what we saw as an opportunity in the North Sea, and it was largely because of the technical experience and background of our team and their knowledge of the North Sea. We saw it as an opportunity in which to build an oil company. So Jersey Oil and Gas began as a private vehicle, and this time last year we did a deal with Trap Oil, which was under duress. They'd been exploring in the North Sea for several years, and what we saw was an opportunity to get a listed vehicle, have some access to a substantial tax loss position, and a legacy portfolio that we were able to manage, and we were able to use as a catalyst to really propel the company forward.
So what assets have you got on the books now?
So since August last year, we've been managing the legacy portfolio within Trap. Some of those licenses, all exploration orientated, we relinquished at the beginning of this year. We did do a deal with Aznor Catalyst in February this year, which we have a contingent success fee payment if there's oil found on that license. And then more recently, the big deal for us was bringing Statoil into license P2170, which was a great result for us.
Yeah, more on Statoil in just a minute. North Sea. Yeah. There's a lot of reports around that suggest it's a spent force, but you would say not to that?
Well, I'd question that. I think that it does have a future. There are certain risks and challenges in the North Sea, we know that. It's labelled as a mature basin, infrastructure under duress. Is it going to survive? There's been massive layoffs, catastrophic layoffs in Aberdeen over the last 18 months. But we see those challenges as potential opportunities. Big divestments going on. The large caps are divesting their portfolios in the North Sea. Late life assets that have abandonment liabilities have potential. If you can manage and negotiate the right sort of deal, it's a great place to pick up good, solid, positive cash flow in production. And
of course, you mentioned Statoil. I mentioned at the top the fact that you brought Statoil in on this deal. Clearly, that is an endorsement from a big oil company. What sort of deal have you hammered out? What's it mean for investors in Jersey?
Well, let me tell you a little bit about what we've done since August last year. We took the license P2170. We identified early on the potential of the license. There had been a couple of prospects that had been mapped out. We furthered that seismic interpretation. We did some petrophysical studies, we did some sedimentological studies, and we readied it for a farm-out process. That farm-out process began in February. We were very encouraged to see, together with our joint venture partners, CFDs, we were encouraged to see the interest and appetite. We had several large companies come into the data room, express interest. Statoil was a company that we were very keen to engage with. I mean, to bring in a company of that calibre.
And a big name in the North Sea as well, of course. I mean,
big
they've got a tremendous reputation.
A very good exploration history in that region, and a desire to continue to explore, contrary to many of the other larger oil companies. So it was a great result. It was one of the very few promoted farm-outs in the North Sea in the last couple of years. And the deal dynamics were that there was a cash payment of $2 million. 60% went to goes to JOG, 40% to CFDs. But more importantly, there's a carry, a $25 million carry on a planned well, and we hope for that planned well to be drilled hopefully next year.
And what do we know about that well target? What do we know about the prospects of that?
So there's three prospects on the acreage that we mapped out and identified. The two primary targets are the Verbier prospect and the Cortina prospect. The Verbier one is very material in size. It has a stope of 300 million barrels of resources. And Cortina is not far off, 212 million barrels. What's interesting, proven hydrocarbon area. They're sandwiched between the Buchan and Tweedsmuir producing fields and have potential for infrastructure export routes not too remote from where they're located. And we think that it's a good high impact material prospect. Very rare in the North Sea of ones of that size, particularly in the central North Sea.
In terms of the strength of the balance sheet at the moment and your expectations and work that needs to be done, clearly there's going to have to be money found from somewhere at some point. How do you move forward with Jersey and the relationship with Statoil, and what are the costs going to be involved, and how are you going to raise the money?
So the carry is a full carry up to $25 million.
Right.
That is in line with our internal drill cost estimates.
Right.
So we think that we're comfortably insulated from cost exposure. We also benefit from a 10% carry from our existing joint venture partner, CFDs. So I think that we're in good shape. I don't expect us to massively run over, although of course there are always operational technical challenges and risks. But I think we're in a good position to have excellent exposure to this well. We retain an 18% carried interest without huge cost exposure.
Yeah, you mentioned earlier on in the interview that you saw the way that the North Sea is moving at the moment to give you potential opportunities, presumably to acquire other assets. Have you got your eye on anything, or is this something you're going to be doing later on after you start to work on the well?
That's very much in concurrence with our stated strategy right from the start. And one of the chief reasons why we saw Trap as an opportunity to come into was that there was a tax loss base of around $40 million, which we think that we can beneficially utilise and extract value from acquiring good, positive, accretive cash flowing production assets. And that's something that we've been working on very thoroughly over the last 12 months. We've been in numerous sales processes. And we're in active negotiations on a number of potential asset acquisitions. So we see it as a platform to grow and build a good, solid, cash-flowing business. Right.
Okay. Talking about growing, I want to take a look, if we can, at the share price. You've got a market cap of just shy of 4 million at the moment. Jersey Oil and Gas share price. You mentioned the fact that you came to the market with this deal with Trap August last year. So this represents a one-year chart. Here we are at 38.8 pence. Looking at the beginning of this year, where we saw 18th of January the low point, clearly we've seen an oil price which is going in a similar sort of direction. Explain a little bit more about investors that are in this business and the way the share price is moving. Is that all to do with the oil price?
Well, it's partly to do with the oil price. I mean, you can see before the end of last year, the share price did trend downwards. But it's very tightly held. There's only 8.4 million shares outstanding in Jersey Oil and Gas, and of that, comfortably 55 to 60% of it is held by management. We've got a very strong shareholding and some key strategic long-term shareholders. So there's not a lot of stock out there, and potentially that's an opportunity, particularly on the back of good news like the Statoil deal.
You want that to change, presumably, do you? You encouraging retail investor on board?
We're very keen, yes, absolutely. We're open for business. We're looking to build a substantial oil company.
Based on the numbers that you know about already, and of course this deal with Statoil, which I know gives a credibility to the whole thing, I mean, market cap of 3.75 million doesn't seem to be...
I think that the Statoil deal alone underpins and gives us a base value from where it is today, with huge upside potential depending on drilling success in the future. Nothing else is valued into the stock.
Yeah.
You know? So I think it's got terrific leverage potential.
Yeah. Well, let's talk, as the last couple of questions, to talk a little bit about where you go from here. You talk about the drilling potential. When's it all start? When are you going to get the next stage underway?
Well, of course, now we're handing over operatorship to Statoil, so they're going to drive the process. Right. Not for me to second guess on their plans and strategy, but what's been announced during the deal announcement is a plan for a well summer next year.
Okay. Well, look, we wish you well with all that. And
Thank you.
Andrew, keep in touch with us 20 years to what goes on. That is Andrew Benitz, who is the Chief Executive of Jersey Oil and Gas.